Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for September 12th, 2007. Well, today was an interesting Wednesday. What did we see today? We saw basically exactly what we expected and we talked about in yesterday's video. And by that I mean we saw a pause day. After a dramatic move, you guys always know we generally say we have that pause day where we have just a flat day in the markets. And that's what we saw. We saw the Dow trading down about 16 points. The Nasdaq was down about 5 points. And the S&P was basically flat on the day. And it was very light volume today. Only 1.5 million contracts traded today in the ES futures contract, which I'm going to flip to right now. And you guys will be able to see the intraday chart here. And this is the intraday 10-minute chart candle. And what we're going to talk a little bit about today is the Fed, because we talked about how light volume should be starting in today. It's going to get even lighter probably Thursday and Friday. And even Monday could be a very quiet day because the Fed meets on Tuesday to announce rate decisions, or they come out with their rate decision at 2:15 p.m. Eastern Standard Time on Tuesday, September 18th. So in other words, what are we saying here, guys? Light volume began to come in today, and we saw a light volume day of 1.5 million contracts. Yesterday we saw 1.8. On the down days last week, we were doing over 2 million. So we can see the trend here in volume has started to lighten up going into this holiday, the Jewish holiday of Rosh Hashanah is coming up here Thursday and Friday. It starts at sundown on Wednesday. And what you're going to see, again, with the Fed next Tuesday, just light trading. No traders really want to take positions going into this. They're very, very cautious. And people are kind of expecting, they're kind of expecting a 0.25 basis point, a quarter basis point cut in interest rates. And it's even getting closer to now expecting a half a basis point cut. All right, and I've heard more and more whispering that that's what they're expecting. So now the question becomes, well, what does the market do if they cut half a basis point? Or what does the market do if they cut a quarter basis point? And that's really up in the air. I'll have to be honest, guys. If the Fed cuts half a basis point, we could very well sell off. We need to retest these lows in this market. It's not that easy just to start moving back up. And I love the fact that psychology of the markets is now becoming more bullish. And a lot of people have said to me, well, now we're thinking, I can't help but think that we're going to go up. I'm doubting whether or not we're going to retest. And as a pro trader, that's exactly what I want to see, because I want to see the amateur kind of long players start to think that the market's going to step back up here and go higher, because that enables those to go long. Big money will lure those people in, and then they will take their money on the push down. The amateur trader obviously sells their position right at the bottom when things look the worst, but really that's the best buying point, and then the market comes back up with the big money being long at that point, and that's what happens. So the question then becomes, well, how do we avoid that? And all I can say, guys, is you got to read the technicals. Technicals are so key, and I'm going to show you some cool things in this chart today, which are going to really open your eyes to some interesting geometric shapes and how the technicals play in. Now, we haven't done a lot on stochastics, but I'll talk about stochastics and other technicals. A lot of technical indicators, folks, it's important to remember they're lagging indicators. Price, time, and pattern are really number one in my book. Stochastics, MACD, those are lagging, and they help us as traders make decisions on whether or not it's a good decision or bad decision when we're borderline. But really those first three, time, price, and pattern, are everything you really want to pay attention to. And you guys know I've shown you guys patterns before, various patterns in this market, whether it's an M pattern, a WV pattern, a head and shoulders pattern. And just to show you guys quickly here, in this intraday chart, we had a pattern here forming. All right, now the market closed here, so we didn't get to complete the pattern now, but we'll see what happens tomorrow. But what did we have? We had a shoulder, a head, and a shoulder formation right here, okay? So again, you can see this is a breakdown pattern. Once you really break this low here, you guys can draw trend lines here, and a breakdown below this point on a head and shoulders pattern is a breakdown pattern, and it usually sells off pretty hard down there, and you get a nice little push down. So that's one pattern I want to talk about there. In addition, what I want to show you is something in relation to yesterday. All right, and this is, again, technical analysis to a key. You got to be always looking for patterns in this market. Okay, and if you guys remember, there's one thing I pointed out yesterday that was on the 60-minute candle, and I'm going to flip to the 60-minute now and show you this key pattern in this market, and this will help you guys learn everything. Remember yesterday when we talked about how this point 2 days, now it was yesterday, it was a day ago, but now it's 2 days ago, connected perfectly with yesterday's chart pattern, and how the market never let us really get below that pattern. All right, every time we came down, we bounced up. We came down, we bounced up, came down, bounced up, and we could never get down through this trend line. Now, well, a lot of people would say, okay, well, that's great, and they'd forget about it. But don't forget about patterns in the market, because if you extend those lines, they become key lines in the following days. So while this one, yesterday, people might just think, okay, well, that was a nice pattern for today. What happens when we extend this line from this point all the way up and bring it all the way up here? All right? So now we obviously have the overnight hours. This is the market trading, the ES futures trading overnight. So this is really light volume, nothing going on. As you can see, no volume down here, but the market's doing a couple contracts. Then the market starts trading today, and look what happens. We push up, and we hit that line, pull back. Hit that line again, pull back, hit that line, pull back, topping out today on that line again. So my point being this, guys, a line that was the bottom the last 2 days, meaning that every time we hit it, we bounced up, became a resistance point on the upside as we came up and hit it and bounced back down. And this line, we could extend now, in theory, we could extend this line for another week, 2 months, a year, and it might come back into play, because that's the key to markets, guys. Things happen like that. Things just continue to play into effect, and it's just so key to understand and follow trend lines, follow moving averages. Just understand how these technicals work. In addition, what I want to show you guys is, on the 60-minute candle chart here, if you take this point right here and extend it, look at what we have. A new trend line here forming where it hits the bottom, bounces, hits the bottom, bounces, then we go up here, test the top, come back down on this candle, you see this little wick here, comes almost down there, bounces up again, we test the top here of this trend, and then we bounce down, hit this bottom, bounce up, hit the bottom again, and close right here. Now that's great to say, okay, well, we have a bottom, we're in a trend here, because you can see now we're in between these two lines, and as long as we stay in between those two lines, you can really trade this market in and out. You could buy here, sell here, buy here, sell here, buy here, and just go back and forth trading this market in a trend. Okay? What's even more interesting, though, guys, I want you to really understand here, you guys know about geometry. I'm sure most of us are familiar with geometric angles and so forth. Notice how these lines are perfectly parallel. All right, this isn't something we made up here. This is how the market trades. And to notice that these lines are parallel is absolutely key, guys. Okay, so I just wanted to show everyone that, and just make sure everyone understands how you can use trend lines that you create and draw yourself for the bottoms and tops of charts, and you guys can play around here. You can draw a trend line from here to here, and this trend line might come into play later on. I mean, it might not come into play for 2 days, but later on, if we extend this line out and continue and draw this line, it might be the top of the market in a future day. We just don't know. So that's the key to it, guys. And again, once you notice it hitting and bouncing off a trend line, then that's when you become able to play this market and buy here and sell up here again, because you can see it staying in those trend lines. And again, when you see lines that are parallel like that, that's even more important. That's more dramatic, guys. That means it's an even stronger trend. Okay. Now let's just go over to the Nasdaq chart here. I want to just show you guys some odds and ends here. And here's the Nasdaq 60-minute. And you can see again here how we kind of sold off later in the day here on the 60-minute. This is the 60-minute candle. We almost came down to the 50 moving average there and the 20, and we kind of bounced up. I'm going to flip back to the 10-minute and just discuss what happened today in this market. Right, here's the market, and here's the Nasdaq. And I want to point out the M pattern we formed here. Notice the M pattern, and everything's pattern, guys. Pattern, price, and time. All right, guys, that is everything. And technically, tomorrow, what we need to look for here is maybe a small move up, and then that's the A pattern forming, and then a breakdown. All right, and we will watch for that pattern tomorrow to see if it does come to fruition. Now, I'm not saying we're going to have a big sell-off, because it's very important to understand, everyone, that volume is going to lighten up even more tomorrow. Unless we get some weird news tomorrow, we should go very light in volume. We did see oil hit a new all-time high today, guys. It's near $80. But again, understand that oil the more oil rises, the more it helps the market. Now, we were up most of the day, even with oil up near $80. And the reason being is they reweighted the Dow and the S&P to include a lot of oil stocks. So obviously, when oil goes up, those oil stocks rise because they can sell their oil for more money, and that helps the indexes. So that's important for us to realize. Eventually, if we get to 100, there will be another tipping point where the market gets scared, but that's a little ways away. Okay, now on this chart right here, what I want to show you here, this is the daily chart now. The daily chart here, what's important to me here is that we tried to bounce above here, and this is the candle from today on the Nasdaq. We tried to get above this 50 moving average, right? We got all the way up to this point right up here. But what the key here is we closed actually below that 50. We sold off all day, closed negative near the lows of the day on the Nasdaq, and we still are below that 50 moving average. So we're still staying in this trend here, mainly, okay? And we've been in and out a little bit, but it seems like we're bouncing up and down between the 50 and the 20 moving average. Let's look for that to continue. We'll see if we can break out and close above this 50 again, which could give us another little push up. And if not, we should trade down to this 20 going into Tuesday. And I think we'll be in this general range going into Tuesday, as people will be very skittish with the market. Alright guys, that's enough for today. I hope you guys have enjoyed it. Market very light volume. We'll probably see light volume tomorrow. Flat trading, we'll see what happens. Unless news comes out, then we'll have a big move. But again, this is what's going on, guys. Keep in mind, Tuesday meeting, Fed meeting, is the most anticipated meeting in a long, long time. And it's going to give the market move some way. We're going to have large volume that day, and the market will move. Take care. Come join the intraday stock chat, the swing trade alerts. We'll talk to you soon.